Let's get some UMISH with Rick Santelli. Morning, Rick.
Good morning, Carl. Now, these are December final reads, so we'll take mid-month read and toss it. Usually there's not big changes. There are some significant changes here. 74 remains the headline. That was our mid-month read, and it's the strongest reading going back to April. Here's where it changes a bit. Our last read on current conditions was 77.7. It's now 75.1. It dropped a bit, but it is still the best read going back to April. So we lost a bit, but it's still, well, consider that all the previous months going back to April were all in the low to mid 60s. So it is a bit of an improvement on a macro vision. If you look at expectations, exactly the opposite. 71.6 mid-month, we popped up to 73.3. And that is the best number, well, just since last month when it was 76.9, and that was the best since March. So they're holding up well. If we look at the inflation, also some surprises. 2.8 on 1 year. It was 2.9. 2.8 would be the smallest, well, since November when it was 2.6. So the reason we're not seeing a huge drop in yields that is lower than expected is because we've kind of been there, done that to a greater degree already this year. Same is true for 5 to 10. We go from 3.01 to 3.0. The low read this year was 2.8. So we are coming down, but not coming down to extremes that we've seen already in 2024. Yields have reversed up off of the early morning PCE numbers where yields had moved down. And the curve has lost 3 basis points of steepness since the number this morning. David, back to you.